Hello and welcome to this week's vlog with me, David Jones, and Trading 212. In this week's vlog, what we're going to do, we're going to take a look at the US dollar index. Had some big moves last week. And also for our strategy session, we're going to talk about triangles, a classic continuation pattern. So this is all looking ahead to the week of May the 22nd. First of all, what happened last week? We saw some big moves in markets. In currencies, we saw the euro move higher. We saw the pound against the dollar through 130. We saw that dollar index that we're going to be talking about in a few minutes' time fall 2%. And we saw, I think for many people, what's a welcome return of volatility in stock markets. We saw the US stock market index, the S&P 500, so the broader US stock market index, push out to fresh all-time highs briefly and then reverse really sharply. And as we've seen in recent months, as we've been getting used to, its political factors have been having a much bigger effect on markets than economic factors. We go back to last June, it was Brexit, of course, the referendum here in the UK. Then we had the surprise Trump win, the presidential election in November. And we had the French election this year. And also over the last week, it was what was going on with President Trump's administration that was causing a bit of volatility in markets, his, shall we say, his disagreement with the FBI. So we saw, plenty of moves, quite sudden and quite sharp moves in markets. So I think it will be, another interesting week to come, particularly maybe for stock markets. Like I said, we did see that S&P 500 move out to fresh all-time highs. It got clobbered the middle of the week, fell off really sharply, but on Friday it was regaining some of those losses. So can it break out again? It's going to be another key market to watch. When it comes to economic events for the week ahead, it's a bit of a quieter week. We've got on Wednesday, 7 p.m. UK time, we've got the latest minutes from the most recent Federal Reserve meeting, the central bank in the USA. So that can often cause volatility in all sorts of assets, gold, currencies, and the stock markets. That's 7 o'clock on Wednesday. Then on Thursday morning, we've got the latest update for UK GDP. So how well is the UK economy doing? Expectations are that the economy grew by about, 2% over the last quarter. But other than that, it's a bit of a quiet week. But I think following on from the volatility that we saw last week, we could still see some decent moves in all sorts of markets in the days ahead. Now, in a second, I'm going to talk about the dollar index. I think it's a really interesting market to watch. It was grabbing headlines last week because it had fallen back to where it was before the US presidential election in November last year. But before we get into that, let's talk a bit about our strategy session for this week. Now, in recent weeks, over the last few vlogs, we've been talking about patterns. So for plenty of people, when they look at charts, patterns are a big deal, and we've covered things like double tops, double bottoms, head and shoulders, and I thought let's wrap up our pattern session by looking this week at continuation patterns, the idea of triangles. So these suggest that what's happening in the market, a pause with the market going sideways, is just the trend having a bit of a rest before it carries on. So that's the textbook approach. Let's have a look at what the theory tells us about triangles and where we should be placing our trades. Let's go to our usual fictional market and take a look at this idea of triangles. So we've got a market that's been trending higher. As we know, markets don't move in one direction forever. And then we get a period where maybe the market doesn't make that much progress and does this sort of thing. So this is our triangle formation. So a chartist will draw lines like that and also like that underneath the lows. And we have, a clear triangle forming on the chart. So the expectation with these sort of patterns is that they'll continue the trend. So what we're waiting for is a breakthrough here. And that's the signal. So when that happens, for chartists, that's the breakout of the triangle. The assumption is the trend is going to continue. And when it comes to targets, the textbook way is the height of the pattern at its base projected up from the breakout point. So if we see a market going sideways in a narrowing range, that's our triangle, and the break here is the signal to trade. Of course, if the market does this, then it's failed as a continuation pattern, and plenty of people will be looking for it to move lower from here. But traditionally, it's going to continue whatever that prior trend was. And it's the break here that's the signal that that trend should be continuing. So that's the textbook approach. As usual, I am a bit skeptical when it comes to markets actually performing like the textbooks are meant to tell us. And I think for some people, me included, these patterns are hard to spot. I think you either have an eye for patterns or you don't. And I can see things like double tops and double bottoms because they're quite clear. But I do have a bit of a problem actually seeing these triangles as and when they're happening. So it's not something that I personally look at much, but maybe it's different for you. Anyway, let's have a look at a real market and see if this triangle pattern actually works in the real world. Let's take a look at our real example. What I've got here is a dollar-yen chart. So the dollar against the Japanese yen. It's 1 hour. So each of these candlesticks represents an hour's worth of trading. And I've zoomed in on a bit of trade from late April through to the 17th of May. So I've highlighted here, you can see first of all, one triangle. So the market had moved sharply higher. So it was trending really strongly for a couple of days. And then, as is often the case, has a bit of time of consolidating. And this is where we had our triangle pattern popping up. And it's the breakout here, the breakout of that triangle, which is all, it's a small downtrend, isn't it, is what we have there. It's the breakout here that suggests that maybe the trend is going to continue. And I suppose if you were buying this breakout, one place to have your stop loss is at the other extreme of the triangle. We've actually got another example a bit later on. Let me just bring up the trend line and highlight it. It's maybe not a perfect example, but again, in the real world, these things rarely are. So after that break of the triangle, the market moved higher and then had a period where it sold off and it just sort of chopped around a little bit. So again, potentially we had a triangle going on there. So we have sort of the 5th to the 8th of May, another place where the market consolidates and then finally breaks out. And once again, that's the signal to trade. So there's a couple of examples there in that big run up that we saw in dollar yen over a couple of weeks where we did have that consolidation, we had the sideways movement, and we had these triangle patterns forming. So there's a couple of half decent examples there of triangles that did work well in dollar yen on the hourly chart. Now when it comes to the market we're going to look at this week, we're going to stick with currencies and we're going to take a look at the US dollar index. Now I think this is a market that plenty of people won't look at. They'll look at things like euro dollar, dollar yen, pound against the dollar, but maybe don't pay that much attention or aren't even aware that the dollar index exists. But I think it's an interesting one to watch. If you're watching currencies, and if you don't want to watch a whole mix of different currencies, then the dollar index makes a lot of sense because it's the dollar against a basket of other currencies. So it's against the euro, makes up the bigger part, something like 57%. I think then it's the yen, then it's the pound, then it's the Canadian dollar, the Swedish krona, and dollar Swiss. There we go. I can read Wikipedia as well as the next man. So it's a mix of these different currencies against the US dollar. So it gives, arguably, a smoother idea of what's going on with the dollar, generally speaking, not just against one particular currency. And this dollar index was in the headlines last week because it fell 2% with reporters saying it's on concerns that the Trump administration is not going to be able to deliver the sort of growth they were talking about because of all the current problems and issues that are going on. So we did see the US dollar under some pressure. But anyway, let's take a look. Let's take a look at what it's been doing over the last 18 months, what last week looked like, and some big levels and maybe some ideas of what we could do in the weeks to come. So here's our daily chart of the dollar index. The easiest way of finding this on the platform, if you click on just the search up here and type in USD, you'll see one of the first ones that come up. Here we go, US dollar index. It's traded as a future, so we're looking at the June contract. Let's just get rid of that for now. So this is going back to September 2015. So we've got about 18 months of the dollar index. And you can see how it had been trending higher for much of the last 12 months until recently. And over the last week, we've broken below that downtrend, bringing us back to where we were just ahead of the US presidential election. So this has grabbed a lot of headlines this week. I think we've seen a 2% fall. It's a significant fall, and you can see that from just looking the chart. It has dragged the RSI. We talked about the RSI before. It's dragged the RSI into oversold. So it does suggest it's been quite an extreme move. The RSI is suggesting that maybe the market's gone far enough. But I wouldn't want to be a buyer just yet, because at the end of last week, it was still really weak. I think perhaps for those of us who want to trade with a new trend, and the new trend now is going off these highs and looking something like that. From a textbook point of view, if we've got a rally back up to 99, 99.40, it looks like a good place to get short. But I think it's going to be a really interesting one to watch now, considering the size of the move last week and also the fact that this trend line has been lost. Let's take a look at the hourly chart and see if there are any short-term levels to keep an eye on. There's that trend line coming in. Let's just get rid of that for now. So we can see it did try and rally over the last week or so, pushed up towards 97, 95. So let's say that the 98 level. I think that's going to be another one to watch for the short-term traders. If it pushes back up, there we go, towards 98, maybe over the next couple of weeks, because the move has been quite extreme. If it starts to run out of steam again, based on the hourly charts, it looks like an interesting level to potentially watch for a short opportunity. But I think if you like, trading currencies, watching what the market's doing, but maybe you don't have the time to watch a mix of different markets, the dollar index is definitely one to keep an eye on. So that's the dollar index. If you're not watching it, I think it's definitely one worth adding to your watch list. We'll wrap things up there. As usual, if you're not subscribed, if you click on the button that should have magically appeared next to my head, there you can subscribe and always get notified when these new videos get uploaded. Don't forget to like the video, assuming you do. And also, if you'd like us to cover anything in the future, just leave us a message in those comments down below. But we'll bring things to an end there, and I hope you have a good trading week.